Hello, YouTube. The last time we saw this pattern play out, it's happened a lot of times, but every single time it has led to a reversal or big gains. What we're talking about specifically is a failed breakdown, which means we went lower, but we failed to hold it, which means the Bears made progress but did not capitalize on it. And in our negative 5% club, we got Pepsi joining the club. We got Coca Cola joining the club. So there's definitely a lot of selling out there. We can note that by still being in extreme fear with a failed breakdown, which means that we did actually break down. That's an important word. But however, if we look to the chart and we note that almost every single time, again, we can look at these different areas I'm pointing at here, specifically going back to March and going back to October of last year, which are these lows. What happened? Well, we hit extreme fear. Then we go a lot higher. Hit extreme fear, go a lot higher. Hit extreme fear. Are we set to go a lot higher? The pattern is here, as I just laid out. And that's exactly what we're going to go through today. So what's the catalyst for tomorrow? Well, it's likely going to be the ADP non-farm payroll. And I have a big question mark beside that. Is it going to hold? I never said we're going higher. I said it's here. It's time to decide if the Bulls are going to defend the failed weekly breakdown. We have non-farm payroll. We got the unemployment rate. And we also have average hourly earnings coming out tomorrow. All of those will be important. Now I want to walk you through the reason why we're still in extreme fear. If you remember those comments we talked about yesterday from Fed officials, we'll look at those in a few minutes. And please make sure you stay tuned till the end of the video if you want to see all of the commentary I'm going to provide because tomorrow's kind of important. So let's read these articles that are from today. Fed's bid to avoid recession tested. Man, weren't they just talking about a soft landing? Why are they talking about avoiding a recession now? All right. McCarthy's ouster raises likelihood of a government shutdown. Oh, maybe that helps to explain it a little bit. Let's read the next one. Stock bulls need a strong earnings season. It's a tough ask. Whoa, that's like a lot of pessimism or what? Or bad news. Now let's read this article here from IBD from yesterday or Investor Business Daily talking about Tesla. Tesla stock flashes aggressive buy signal, leading the S&P 500 as bulls shrug off bad news. What did I just show you? I showed you a deluge of bad news. It's why we're in extreme fear. It's why the market is where it is. Okay, so could the market shrug off the bad news of jobs? It could. Remember on, let me see if I can bring it back here. The ADP non-farm payroll number that we got on Wednesday, it was bad. And what was that? That was the start of the bottom. So, bad news is supposed to be good. That's right. ADP non-farm payroll came in at 89,000, which is below 100K. That was the big number. That's what we wanted to see. I'm not sure what's going to come tomorrow. These numbers are a little bit mixed for me. Unemployment rate's going to tick down. Average hourly earnings is going to tick up. Non-farm payroll is going to tick down. But these are this is a forecast. It's not a guarantee. It's a forecast. Just like what I'm doing for the stock market. I'm like the weatherman making a prediction. I'm not telling you where we're going to go. I'm telling you where I think we can go. So I think we're going to go higher tomorrow, and it could be on good news or it could be on bad news. We can shrug it off for sure. If we look at that heat map, there's a reason why Tesla is up about 8% in the last week. So if we look here to our heat map, what do we know? Well, if we go in the last 5 days, well, the negative 5% club is growing, but Tesla here is pretty green. It's up by 8% on bad news. Maybe we have some positive news coming. Like what? Like their Cybertruck deliveries. And I'm going to ask you for a huge favor before we go further. If you wouldn't mind, please considering smashing that thumbs up and subscribing to the channel. I would really, really appreciate that. Thank you ahead of time. So the reason why I talk about this is because we went through these articles starting only yesterday, right? We go back to Tiff McLean, and someone pointed out that this guy was definitely wrong. He was. So was Jay Powell, soft landing. Remember that? Transitory. I remember that. So he said sufficiently restrictive. Then we hear the former Fed chair, or Janet Yellen, basically telling us that by no means are higher for longer a given. Then we hear from Rich Clarity yesterday, who tells us that the Fed might be done. Okay, cool. Then we hear from Christine Lagarde, who says what? Sufficiently restrictive. Okay. Then we hear from Atlanta Fed President Raphael Bostic saying what? Sufficiently restrictive. And then I don't have them handy right now, but Dally today said, let me see if I can see what she said here. Here we go. She had we knew there were a lot of Fed speakers today. Just listen to what she said. Recent bond market tightening equals one rate hike. So isn't that what everyone thought the worst case scenario would be? And then we can look at what Goolsbee said today. Goolsbee, and he basically said he's a little bit puzzled by the move. Right? Let me see if I can find it here. Here we go. Chicago Fed President Austin Goolsbee sees puzzle in recent rate spike. I think the puzzle that people are trying to put it together is, well, Why did it happen in the last 3 weeks? It's because of what you guys said for higher for longer. Oh, yeah, higher for longer. One more this year. Well, they seem to really be walking it back. And that's where they're saying it's equal to one sufficiently restrictive, right? They're all echoing that same thing, which is what I mentioned yesterday. If we start hearing chirping from other officials or other people around the world saying the same thing, man, let's be receptive to that. So if all this bad news is baking into extreme fear, there's a risk of a financial accident, is what they call that, a financial event, right? A crisis. But what if something bullish happens? Remember this article where we talked about Tesla? So Tesla is flashing an aggressive buy signal. I think it's because people are front running the news of the Cybertruck. That's what I think. They're shrugging off the bad news. Whatever. What about the Cybertruck? Well, what about what's going to happen next year with the with OpenAI? They've done another raise. They increased the company's value. This is like a big headline here. The guy who designed the iPhone is reportedly talking to ChatGPT boss Sam Altman about making a new AI device. And this is from September 25th. We were told that sometime in the next 2 weeks, which is pretty close to now, you can expect an update from ChatGPT with pictures and voice commands. Again, please make sure to drop me a comment as you're considering subscribing to the channel and tell me whether or not you've actually even heard about this. Have you heard about ChatGPT doing voice commands or doing picture commands? Why? This is basically Siri, and this is basically something brand new. So the fact that we're seeing that, it's a pretty big deal because when people hear about that, the super popular AI chatbot has always just been a text box. Now it's learning to understand your questions in new ways. Whoa, this looks like a big upgrade. And we also have this massive crush of the GDP coming in. So when those headlines tell us that we're going to have to see something, it's going to be a tall order, a tough ask from bulls to get Q3 earnings to do well. Well, we could see top line revenue grow. We could see earnings get some compression or just have a hard time. But man, I'm cautiously optimistic. And I thought that today I would actually show you how I go through and actually build a YouTube thumbnail so you can see that there's a white background, and that's just because I start with it being all black, and then I delete all my lines, and then I bring it back. There you go, bears. There's your bear case. There's the SPX weekly chart, and how we were looking for a crash landing as low as 41.46 or a 10% dip off the top. Why does this matter? Well, because we're pretty close to getting there. So do we need to make that extra couple of percent? Let's see. We're down as much as 8.5%, which means we made it about 85% of the way there. I think that the 80-20 rule here, or Pareto's law, 85% is probably close enough. There's other things at play here. There's other market wins. And I think the risk that we could break out is starting to increase. Why? Hey, failed breakdowns are bullish. I love that pattern. I just showed you the reason why. I love buying them. And then when I look here at the daily chart for the S&P, what do I know? Well, I know we do have the upper gap. So if we're going to get a squeeze higher, there's a few things I would look for. Getting pretty close to the 200 would mean I would look for a move up pretty close to the 50. Oh, that happens to like correspond with the gap here. Oh, and that would like kind of form a W or a cup and handle here. Oh, it kind of would. And then what can we do? This is, again, I'm putting on my detective hat, trying to think about what the market's going to do. How am I going to react if this happens? Because we have a plan, and then we see if the plan plays out. I think this is going to happen. This is what I think. I think we're going to go down. We're going to go back up. We're going to get close, maybe not to the average. We're going to back test what? Probably last month's low. That's 433. So we get what? Some kind of gap fill, test the 50 as it rolls down here. We form a cup and handle. And then over here, it's to be determined. Are we going to get that leg higher? Are we going to put in a bull break? Or are we going to get a bear fade where we go down to a new low like everyone's kind of expecting? The consensus right now is that we're going to go down. So being the contrarian, I think maybe it's time to go up. So that's really what I'm looking for. I don't want to make it overly complicated. I'm looking at very simple charts to make it a very simple story for you to follow. And I'm trying not to overcomplicate it because I think I've been doing a good job of laying out my notes on the weekend. So the last thing I want to look at here is just the push-pull that we're currently seeing on the daily chart. We have a tight double inside bar. So a double inside bar for me, by definition, means consolidation. With volume being flat and a major catalyst coming in tomorrow, we are at risk of breaking out. Why? We're closing near the high of the day. We're over last week's low with a failed breakdown. And I like what I see here. We could definitely get a break. That would be a violation of the 200, or that could create more forced selling. But look and see what the range on the day is today. We talked about 1% ranges creating that forced selling. Well, from low to high, we're up by about 1%. But if we flip this to a line chart, what do we know? Oh, the lines are actually starting to get a lot closer. One big move, otherwise opening and closing around the same price. We're stabilizing. So what does that mean? I'm not 100% sure, but stocks can go down, they can go sideways, or they can go up. I see that we have stopped going down. Sorry, we've stopped going up for sure. If I now look here to a trend line, have we stopped going down? Not yet. So it's definitely premature, but this can happen fast. I think that ADP non-farm payroll is really going to drive things to bottom. So that's pretty much it. I don't want to go any further because actually there's one more thing I want to show you here quickly. It's this other signal I've been looking at for a buy signal. So not that I'm only looking at buys, but look, like we're starting to get a breakdown on the 10-year note. I would expect that if we get a failed breakout and we fall back below 466 here or last week's high, that would lead to a retest of 433. And again, everyone's like kind of saying, we've already kind of done a hike. What are you guys doing? We went from 4.3 to 4.7. That's the equivalent of two hikes. So we can walk it back down to where? Probably 4.4, 4.5, something like that. That'd be a little bit more appropriate. But we already got our crash, right? We got our crash signal. So where's the bottom? Well, usually when we hit extreme fear, which we just did. And now let's look to this last signal here I want to show you. It's this one here. So we can look at fear and greed. We can look at the chart. We can see we're oversold, but how oversold are we? Well, let's look here to the S&P 500 stocks, which are below their 50 DMA, and we're looking at a weekly chart. So right now we note that, oh man, let's make this simple. So we talked about March being a bottom. Okay. September, October being a bottom. Okay. And then June of last year being a bottom. Oh man, it's like we're more oversold than March. We're as oversold as the bottom last year. Yes, we are. There's only currently one or 10%, one in 10 stocks or 10% of the S&P 500, basically 50 stocks, which are above their short-term price. Oh, so like most stocks are already pretty weak. Yes, they are. And then we look here to stocks that are above or below their 200 DMA. And again, a weekly chart. What do we know? So there's September, that same thing. There's the June, there's the March. So we could be more oversold. We can go back down to 10. That would mean like there's a financial accident, something happened, and the Fed is likely pivoting. So that would be bearish in the short term, but then likely bullish in the long term. The Fed pivot means that we're at least going to see a relief rally. It happens every time. So I'm definitely not seeing confirmation that I'm right, but I'm seeing some confirmation that we're getting pretty close to the bear target. It's close enough for me that 80-20 rule says that I want to be receptive to where we are aiming for the bottom, not the bottom. We're not going to bottom tick. We're going to aim for a zone. And I think we're in the zone. With the failed breakdown, it means that even though we're red on the week, we failed to make fresh progress because the low from last week is a lower level than we are right now. We're back above the most extreme fear reading from last week, meaning the low of the week. We're back above that. That's a failed breakdown. That's constructive if it holds. If we fall back below it, which could easily happen, then we lose it. So with that said, if you want to hang out with us, you can come to our Friday stream tomorrow. We're going to be live for the final hour at 3 p.m. You can also come hang out with me, Justin, from YouTube by going to our website for 14 free days. Because what could happen in the next 14 days could really change the game. It's here. Take some action. Maybe you want to sign up. And if not, then you can look at the video queued up here on the left-hand side where you can actually watch my weekend notes, my weekend plans to see whether or not what I predicted would be happening, to see whether or not you should trust my judgment going forward. Thank you for tuning in. I look forward to seeing you tomorrow.